Hello, everybody. Welcome to today's fundamentals. Hello, Peter.
Hello.
Peter, how is the USD behaving today?
Well, the US dollar yesterday was rather up. It strengthened. We may say that there were some safe haven inflows to the greenback, and it was characteristic, I think, that across the board with major currency pairs, the US dollar gaining was the mode of the day. Maybe there was one exception of USD CHF.
And how about the US stock market?
US stock markets were down. We're talking about all three main indexes, Dow Jones, Nasdaq, S&P 500 dropping. Would expect that there is a cautious sentiment in the market, which, if it's going to be expressed also today, we may see stock markets dropping even further.
And moving now to precious metals, what's happening with gold's price?
Well, gold's price, practically what happened was that the strengthening of the US dollar tended to weigh on gold's price. However, on the other side, we have to note here that the strengthening of the USD was not exactly reflected on the drop of gold. Gold may have dropped less than what was expected. That was a little bit disappointing. But other than that, we have to note that gold's price may be on the upside today.
And what about oil?
Oil dropped. It was for a second consecutive day. By the way, we have to note here that we had the EIA crude oil inventories figure yesterday, which showed another substantial increase beyond market expectations of US oil reserves. More or less, the release as such tended to verify that the AP report may not have been quantitatively correct, but still it showed that the slack in the US oil market is actually present. And that may have weighed on oil's price. On the other hand, I think that also the expectations for a slowdown of economic activity, possibly a recession, may have weighed on oil's price as well.
And on a fundamental level, is the vote count for the midterm elections over?
Actually not, they're still counting. And we have to note here that Republicans seem to be on the verge of getting a majority in the House of Representatives. The Senate is too close to call, and it seems that it's heading towards a draw, i.e. 50 seats each. Should that be the case, that would imply practically that Republicans will be able to veto some decisions of the US president and curtail the expansive fiscal policy plans that President Biden had. I would note, though, that on a political level, I think we mentioned that yesterday as well, the big red wave which was expected did not come. The gains which the Republicans made were, I wouldn't say marginal, but still they weren't as impressive as was expected. And definitely that's going to be an obstacle for a possible rerun of former President Trump. By the way, President Trump had announced yesterday that he will have a big announcement on November 15th, at which he may express his, I would say, interest in being renominated once again for the presidential elections in 2 years' time. So it's a big issue. We're going to have to wait and see.
And what's on the calendar for today?
Well, we already had Norway CPI rates, and we had there an acceleration beyond market expectations, which may more or less turn Norges Bank more hawkish. On the flip side, a little bit later, we had from the Czech Republic also the CPI rates for October. In this case, the headline rate on a year-on-year level slowed down more than expected, reflecting possibly also the effects of the continuous tightening of the Czech National Bank. Today, the highlight is definitely going to be from the US, the CPI rates for October. Now we have a headline rate which is expected to slow down to 8% from 8.2% year on year in September. Should that be the case, that would imply that inflationary pressures in the US economy have peaked and are now slowing down. Yet 8% is still a far cry from the Fed's target of 2%. And I don't think that's going to be enough. It's characteristic that in the September release, we had a slowdown of the headline CPI rate from 8.4 to 8.2, but everything else was up, including the core rates. And that tended to provide some support for the USD. And let's not forget also that the month-on-month rate is expected to accelerate, which may imply that inflationary pressures in the US economy are still simmering under the surface.
And what about the monetary front?
Well, we have a number of speakers. I would make a start with ECB's Schnabel. Now, Isabel Schnabel may sound a little bit more hawkish, and should that be the case, we may see the euro getting some support. I would be also noting from Bank of England Monetary Policy Committee member Tenreiro, which could also be focusing on inflationary pressures in the UK economy. Mind you that we're getting the CPI rates for October of the UK next week, so that's going to be an issue. And from the Fed, I would be noting definitely Philadelphia Fed President Harker. And during tomorrow's Asian session, we get New York Fed President Williams. Mind you that we had a comment from Minneapolis Fed President Kashkari, where he stated practically that any talk for a possible pivot in the Fed's stance, the Fed's hawkish stance, is premature. And that tended to more or less underscore the hawkishness of the bank. Last but not least, I would be noting also from Bank of Canada, Tiff Macklem, the governor. Most probably, I would expect the governor of BOC to reiterate the easing of the bank's hawkishness. And if that's the case, we may see some bearish tendencies for the Canadian dollar.
Any final comments?
Well, it's a big question what happens with the midterm elections. Okay, the Republicans are still poised to gain control over the House of Representatives, but I want to see the last vote being counted and the results being locked in before making any comments here. And also the Senate is once again a toss of a coin. On the other hand, should the cautious sentiment in the market, given the turmoil in other riskier classes of assets, which is being present since yesterday, continue to affect also the US stock markets, we may see US stock indexes dropping further.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
Welcome to the technical analysis part of the presentation. My name is Peter Yosef, Senior Market Analyst at IronFX.
Give me a moment. I'm trying
In
to
front
figure
of
out
your
the YouTube stream
screens, you
as
have
well.
the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. We had mentioned yesterday the bullish tendencies of the dollar index, and we had mentioned that it could break the 110 resistance line, possibly even the 110.60. It actually did, and 24 hours later, you can see how the price action has broken both the former R1 and the R2. Both now have to be turned into support lines. With no time to waste, let's do that. So we change the color so that it becomes more visually evident that the role has switched from a resistance line to a support line. There were some doubts on whether the
Okay, so I've seen one more
110.60 was broken clearly.
person joining.
For a better picture, let me drill into the 1-hour chart, and we can see here that it has broken.
Okay,
We are
I think
already
we
on the
will
second
just start
candlestick
and go
above
ahead.
110.60. That means that for the past
Okay,
hour,
so
that would be the past few minutes,
let's
we
look at
are
some pairs
above the
today.
reading of 110.60. It's still not conclusive,
Not
but
sure
it's an
whether my screen
indication.
is sharing fine.
Drilling back out to the 4-hour chart, let's go hunting. I would be placing one resistance line.
Okay, so we are
on this
seeing,
peak here.
let's go down to the weekly view. So we are still
And
seeing
that
that
would be red.
USD as a currency is still very strong in general, and we are still seeing that
112.45.
Jap yen is still on the fall. So you can see the USD JPY is
The
actually
second
on the
level I would be
upward
noting,
trend. Obviously not a
and
very
this is a
nice
little bit
trend
too low,
line, a
but
very
it
steep
still has a
one
number
rather.
of touches,
So we are currently on
so
the
it seems to be quite
weekly
valid. On the other hand, note how there was a
chart.
continuous
We can
upward
see
movement
there's
here.
a possible for a small channel
I
that
would
we
be
are
choosing
looking at.
this one. This double peak here. And it encloses practically the sideways motion
small
as an
channel
upper
that we are
boundary.
looking at,
Also, it was
ascending
breached
channel,
slightly
and we are
here.
seeing the slight drop
See?
for
Keeping
USD
this,
JPY
and
from
that
now.
would be the 113.50, sorry, 4.45. Red, sorry.
Okay,
let's widen the chart.
then yeah, moving down to the daily.
I understand that we are
looking at
setting a
this
little bit of
currently.
a high standard, high target for the US dollar index to reach.
We're
But
looking at this. We are
that
moving
should not
removing our MA first, and then we'll do the final
depending on the
analysis on
volatility,
the 4-hour
the US
chart.
dollar index could easily manage that, i.e. to break at least the R1. 112.45.
Okay, thank you for the answer.
Being the second
And then we are looking
resistance
at
line.
a basis supporting line at price 142.097.
First resistance line now being placed at.
All right, and then we can see that price did touch the top of our channel that we drawn on the daily. Let me just annotate this, will be slightly easier for you guys.
First support line being placed at 110.60, so we're talking about 90 ticks. Second support line,
we can see that we have a, sorry, that is a
only 60 ticks below, there's one.
Could be wider. We also see
I wouldn't be arguing that.
Daily.
But for the time being, I want to be a little bit cautious to the downside.
Line. Okay, and then we will see we are expecting actually USD JPY to make a small drop down to the bottom of the channel, which is the supporting line of the channel. However, we are also looking at a what we call a pullback. is also gonna be our newest support, our resistance turn support. You can take a look here where we are looking at this part.
So we have an upward movement of the US dollar index,
resistance.
Which could
all right, then we are moving down to 4 hours.
A little bit to the lower side though.
So 4 hours fast stretch. So recent 4 hours, we are looking at a slight downward movement.
But the correction lower yesterday,
descending
during today's Asian session to be exact,
line, we will be looking at this.
Yeah, in the late American session,
a more close support line, we will be looking at 145.526.
This correction lower tends to exactly
in this case, we can also shift the support line further down to 145.177, and then we can have a recent resistance.
So we switch our bias for a sideways movement in favor of a bullish outlook, a clear-cut bullish outlook.
Okay, we are actually looking at a small drop over here for.
And should that be the case, we may see the US dollar index reaching, if not breaching.
All right. However, we must be sure that price must drop down from the trend line, the descending trend line that we are looking at. If it's not dropping down, then we will have to take a look at possibility of a breakthrough, which is a bounce from the support.
That's just broken above the reading of 50.
Okay, so we are looking at a possible bounce. If price actually exceeds this descending trend line, then we are expected to see a breakthrough on the USD JPY back up to possible the previous high at 147.22.
While on the flip side, a bearish outlook
now let's just use our Fibonacci
signal A by the breaking of the 110.60, B
so we are actually possibly looking at 38.2%, very nicely lined up over here at our first resistance.
The price action to drop below the 110.
And definitely if there is a breakthrough, we'll be looking at a price to break through at this second resistance, which is our 50% Fibonacci rejection. Hold on. Okay, this is what we are looking at right now. And then let's use our Fibonacci projection.
Let's have a look now at Euro USD. Euro USD is for our chart. Wide drop being reflected. Let's adjust the levels first. Okay, definitely the S1 parallel level has been broken. We turn it into a resistance line.
Okay, so you can see that in this case of Fibonacci projection, you can see that it reached the 100% Fibonacci projection at our first support and then make a bounce up to the first resistance. So yes, actually this 100% has already been carried out. However, this is a point where we can tell that actually our first support that we have actually drawn out here for price 145.177 is really strong. And to be something to be focused on the 4-hour mark time chart. Okay, so now we can put in some indicators looking at a Ichimoku cloud. Sorry, let me remove the Fibonacci levels.
We mentioned yesterday how the price action of Euro USD broke above the upward trend line, yet at the same time had broken the upward trend line, and we had noted the possible bearish tendencies, which were expressed during today's European session a little bit late, but still.
All right, are you able to actually mute? Let me try to mute all.
The R3 now is being placed at 1.01925. Second resistance line at 1.0090.
I'm seeing a
first resistance line now has been turned into the parallel level.
Okay, so let's continue moving on looking at our Ichimoku cloud. We can see that in this case, Ichimoku cloud, our prices are actually way below the Ichimoku cloud. That's one of the way we use Ichimoku cloud. If prices actually have already dropped down and crossed under the Ichimoku cloud indicator, then we are expecting to see a downward movement of the price. We can also put in our conversion and baseline. to see a very basic crossover. So in this case, it is a downward movement. We are expecting a red line, which is our baseline, to actually cross from below to above the conversion line. So in this case, let's zoom in. I'm not sure whether you guys are able to see it. We can see that there is a cross here.
We note that
with the price beneath the Ichimoku cloud, and we are also looking at a pretty strong resistance where there is a downward moving descending trend line. We are also looking at a possible 38.2 Fibonacci retracement as our first resistance. That is what we are currently looking at. Pretty credible for the downward movement. However, hold on until this current candle is actually done moving, and then we will see whether price actually did indeed exceed our downward trend line. If it doesn't, there's a high chance that it will drop back down to our first support with the support of our 100% Fibonacci projection.
So we would expect the price
Let's also take a look at moving average
and continue low. On the other hand, though, see how the price action is about to hit on the lower Bollinger Band. It's actually testing it right now.
And then we are looking
which on the one
at
hand,
it
will
21-day length.
The lower Bollinger Band, and
you can see that for, let me change the color.
Moving average
very hard to
lower.
See.
On the flip side, though,
okay, for the black line will be our moving average. So you can see the price have a sign of actually trying to break the moving average. So if we are looking at this 21-day moving average, we should be more conservative of our actions towards USD JPY. Like I said, personally, I would have waited till this candle is done or finished before we proceed with any form of trading. Alright. I do see that there are more attendees now. Do you guys want to request for any pairs? If not, I will move on to analyze another pair of choice.
Albeit not probable, but possible, we may see the bulls taking over once again, which may more or less imply that the price action will have to reverse direction, break above the parallel level. Definitely that would be a must for a bullish outlook. And start aiming for the 1.0095.
I will move on then.
Once again,
let's look at.
Let's keep the basics. Euro USD is dropping. We expect this bearish movement to continue.
Just remove all the indicators and go
Some
back.
stabilization may occur given that the price action has reached and actually broken below the bottom.
Okay, we can see that initially there was a ascending channel here or some sorts for the weekly chart. However, price has already go way above these channels that we are looking at.
Is down southwards. Let's have a look at table.
There's many peaks. Okay, you can see that price right now, it has already shot up of an ascending channel.
So
looking for a downward movement.
Rather than a
okay, and then we are seeing some important horizontal levels that I'm seeing right here.
Table remains sideways.
Okay, there is a small.
It's quite,
I would say small.
Tight range bound.
There's a.
Let's widen this.
Resistance and support turn resistance situation here at price 1.38657. We can also get this ascending resistance for the channel as a possible support price. Okay, we are looking at 133.74 for a weekly. So let me just annotate this.
There may be some slight bearish tendencies here, but for the time being, the sideways scenario between the 1.1455 and the 1.1250 seems to be the main one. We're talking about a 205 pips distance between the R1 and the S1, providing ample of range and room for the price action to remain. On the flip side, we have mentioned the slight bearish tendencies, but for bearish outlook,
to see whether we would require any more trends.
A drop of a pair, a clear breaking of the 1.1250. I would like to see a lower true than this one. And the price action to start aiming for 1.1055. Such a scenario would allow us also to draw a clear downward trend line, which
this is
would
a
be
possible head and shoulder
showing us
situation.
also the limitations.
First of all, the condition is that it has to be
of a
an upward
possible
trend.
bearish movement for the
All
pair.
of the tag
On the
points
other
has to
hand,
be
should
reached.
the bulls take over,
All right, has to be reached
we
at the
may
end
see
of
the
the
price
candle.
action
There's
of
a
cable
chance that we are
rising,
seeing a drop
breaking
and a
above the
slight pullback right now to
1.1455
test the
and
neckline
start aiming
level
for the 1.1640.
over here.
Okay, let's have a look
Right,
at
we are
USD/JPY.
trying to see whether they are testing a possible
USD/JPY, which rose and
neckline level.
stabilized. Some slight bullish tendencies here, but nothing
yeah,
conclusive
this is the
yet.
neckline, and for
In a similar fashion
head and shoulders, there's a chance that there is
GBP/USD
a
in a tight range-bound movement.
pullback to
We
the
tend to
half
expect
of the
that
head and shoulder before it finally
the
dropping
movement
down.
is
So currently, I'm
about
actually
to
expecting a
continue,
possibility where price will actually
and
pull back
most
to
probably the pair is going to remain between the
1.36035 before
147, the
dropping back down for dollar
145.50.
CAD.
I would
I'm
note
kind
though
of
that
leaning more
low
towards the
volatility may narrow the range-bound movement even further.
drop for dollar CAD, even though it does seem
on
like
the other
it is
hand,
in a
I
two
would note that there are some
price in between two
slight
prices, which we are looking at
tendencies, but nothing
1.33474
conclusive yet.
and
We have mentioned that. Mind you that the RSI
1.38657,
indicator
more of
below the 4-hour
a
chart is at the reading of
non-trending
50,
one.
implying rather
However,
indecisive
I
market.
believe that we are more keen to actually look into
And
a
that could
downward
allow
movement
practically the
with dollar
sideways
CAD.
movement to be maintained for USD/JPY.
However, I don't
Should
think
the
right now
bulls,
is the
though,
best entry timing.
continue higher,
Okay, I don't think right now is the
and
best
in this
entry
case,
timing, provided that we are looking at this
we
head and
may
shoulder
be
that we
more
are
well
seeing to
informed
be
should we drill
accurate.
down to the
Okay,
1-hour chart. Yep.
let's move on to, let me
Still
think of
nothing
any
conclusive.
other pairs that,
Nevertheless,
shall we
back to
do
the 4-hour
gold?
chart. Should the bulls take over and the
Okay, let's
current
start on
sideways
weekly.
movement be abandoned, we may see the price action of USD/JPY rising, breaking the 147 resistance line, and start aiming
Okay,
for the
right now I'm
148.80.
looking at
It's a
a
big jump. I wouldn't expect it to reach
weekly,
as high as the
very
148.80,
small
but
support that
definitely
we
a
are
break of the
very,
100, a
we
clear
are
break
zooming
of
in.
the 147
We are also
would be
looking at
required
a downward
in the price action
trend
to start aiming somewhere higher.
that has recently been
I
broken.
would like to see
All
a
right,
peak
just
higher than
this
this one.
current candle that is moving right now. So we have to take note of this current candle pricing at 1700.
On the other hand, should the best take over, which is also a possible scenario,
and
we
then we
may
are
see the price
looking at
action reversing
this
direction, breaking the 145.50, which is the current low boundary of its
support
sideways
turn
movement,
resistance
and
price
start
at
aiming for the
1795.651. Let's look at daily. Yeah, daily gives us a much clearer
Definitely
picture.
a clear breaking of the S1 would be required for a bearish scenario.
That price has suddenly actually already broke out of a descending trend line on the weekly. However, we are still looking at
USD/CHF, which
1730.343 as a weekly
but jumped back
resistance.
higher, implying a strengthening of the US dollar or weakening of the CHF.
And then we are looking
My bets
at
would be on the
this
strengthening of the
as
USD rather than the weakening of the CHF,
1620.332 as a weekly support.
Nevertheless,
Daily support.
seems to have broken the downward trend line. The sideways motion seems to continue, possibly between the 0.9920 and the 0.9840. Albeit I wouldn't be surprised to see it slightly breaking below the S1.
So we are seeing that actually gold right now is actually in between these two prices, 1730.343 and 1620.332.
On the other hand, the RSI indicator below the 4-hour chart has risen and is pretty near the reading of 50. It's actually at 46.4 right now.
On the 4-hour, there is a small, very small resistance, 1716.251.
Should that be the case, I wouldn't be surprised to see USD/CHF breaking above the 0.9920
I don't think this is the
top
yet for a dropping price. Much more rather, I am looking at a upward movement for gold right now. So instead of that, I am looking at a support at 1704.3730. We can put this as a H4 support.
On the other hand, in case of a bearish scenario, we may see the price action reversing direction, breaking the 0.9840 support line, and start aiming.
Alright, so we can look at this daily resistance still. For H4,
let's have a look at the OSIC, commodity currency AUD/USD,
for a further upward movement. So nice let's look at
downward
our
motion.
retracement. We are looking at 38.2% for our fib retracement over here. And oops, sorry. And then we can look at the second support at 1694.768. We are looking at a smaller upward movement. Do bear.
So
yes, it looks like a very small trade, but our 1728.
That would be
1730.070 is actually a daily resistance. So it's actually a pretty big level to not
as long as the downward price
harder chance for it to exit, harder chance for the price to exit. So let's keep our trade personally, I will keep it more short. Prefer it to actually it will be great if it moves up to 1730.07. And if price actually exceed our 1730.07, then we will be looking at a further increase or price increase to a possible 1764. However, until then, if it price does not exceed, I will not personally will not be trading above the price of 1730.07. So for those who are looking way beyond 1730.070, or you are looking at a downward movement, downward movement is highly unlikely for me right now, because I'm seeing that it actually just exceeded our weekly downward descending trend line.
It has a stability.
And for the upward moving ones, they are looking way past 1730, which is the daily resistance. Personally, I will wait for price to actually exceed 1730 before entering again. Alright, so I would like to keep my analysis to be more short and sweet one. Alright, let's look at a. So the H2 support can be, the H4 second support can actually act as your
being lower and lower, while the shows are lower and lower.
Stop loss. Alright,
it's a very nice steady flow to downwards.
Projections.
Daily chart, 4-hour chart. Okay. So once again, we maintain a bearish outlook and would expect the price action to drop below the 0.6365 and start aiming for 0.6275. On the flip side, though,
so we are seeing that our daily resistance, or actually our take profit and point of price is actually very in line with our 100% Fibonacci projection. All right, and then let's look at Ichimoku and see where the price has exceeded.
In which case,
for the H4, you can see that Ichimoku price is way above the Ichimoku cloud. And then let's bring in our base and conversion lines. You can see that blue line did cross under the red line, which is the conversion line did cross above the baseline. So we can see that the cross has happened here. We are actually waiting for a upward movement. However, there is a chance where movement upward movement has been exhausted, and there is a chance of dropping down. All right, because we can see the price did shoot up a lot from 1678 and then now all the way up to 1715. It's a pretty big upward movement. All right, so do look at the stop loss. For those that are uncomfortable with the stop loss, do move it closer or further according to your analysis. All right, this is what I'm currently seeing.
I would expect the price action to reverse direction.
Let's look at
break, as we have mentioned before.
Okay, so there's a chance where the upward movement has been exhausted. You can see the RSI is actually.
However, for bullish outlook, I would also require clear breaking of the 0.6465 resistance line and the price action to start aiming for 0.65.
All right, RSI did reach the
level
peak
which
for a
provided
bit.
substantial resistance here, aimed for here.
All right,
Tested
that's something to
again here.
note.
So it's pretty valid as well.
Stochastics are actually looking quite dangerous
Let's have a look
as well.
at USD
There's a
CAD.
chance where the price did the upward movement
Now,
is
USD
actually
CAD has
did
been on the
exhaust.
rise.
Okay, so depending on what indicators that you
That's
normally use for
since
gold, do take
the
note
8th of
of
the
those
month as well.
indicators as well. However, I'm more leaning towards
No one can deny
Ichimoku
that
Club.
there is an
All right,
upward
this
movement
is
here,
for gold.
despite some stabilization over 12 hours.
Let's look at something
The
else.
second one here. But that actually
Okay, I see
intensifies the
dollar
bullish sentiment as,
euro.
despite some difficulties, the pair was able to move decisively
We'll
higher,
move on to
breaking
this. Let's remove
the
all the indicators and
1.35
start back from the
resistance
weekly
line that
as
was
well.
yesterday. And we had mentioned
Okay,
that practically
you can
possible
see that
breaking
this
of
is
the
a very
R1
nice upward
would be
movement
signaling
for
exactly the
dollar
breaking
euro.
of the sideways movement. Actually, even
I'm trying
the
to look
breaking
for
of the
any
downward trend
horizontal
line,
levels that I
which
can
we had
leverage
marked
with.
yesterday,
Okay, there
signaled
is
the
a
change
one
reversal.
level here at
The trend reversal.
2002. All right, we do see that actually our price did react to the level a little bit at 1.0329. Okay. This is a very small level, but it's still something to take note of. We are looking at this horizontal level. Let me just annotate this.
The R4 is now being deleted.
So basically, price has not reached this high since 2002. All right, it's still something to take note of.
For USD CAD, the greenback
we are still seeing an ascending trend over here.
Second resistance line being placed at 1.3850.
Okay, so we can see that actually the current week candle is actually on the line, on the trend line. So we will zoom in further down to see what we are expecting. Okay, so if you want to zoom in a bit more, you can see that actually daily did have a descending trend line. All right, we are looking at a potential support
line now being placed at 1.3350.
Potential support at 0.9899.
So final support line, the 1.3210.
0.9899. We are looking at a possible support. All right, and then let's zoom in down to 4 hours. There's nothing much on the daily for us to conclude.
Let's lock this in.
Okay, so for 4 hours, let me just remove this trend line, and there's something that is very specific that we can look at. You can see that actually price is actually moving up and down on in between price 1.0269 and 0.9899.
The former first resistance line,
right. So we are looking at these two prices, and there's no particular trend in this case. However, there is a support trend resistance line at 1.0062.
A nice upward movement.
All right.
Which started from...
Even if we remove this line, I do see the USD Euro does not have a very specific trading right now, unless it goes to the top or bottom. I don't think right now in the middle of the chart or middle of the price points is a good trade.
Tends to imply that the bulls are still in play.
To proceed with, personally, I would skip on this or put this on hold for further observation. But for the benefit of the analysis, we will go down to an hour. If you guys do hourly trades as well, then you guys can take a look at this. All right, so we are looking at
a catch on the technical level here.
Much smaller.
The price action
trend
has
line,
met.
all right. Price did indeed exceed the descending trend line. We are looking at a smaller price point support at 0.9962.
Both levels could create some hesitation for the bulls.
And then we are also looking at a resistance price point at
any further advancement.
1.0104. Okay, so for those that do hourly trades for dollar euro and you guys still want to trade this
support line,
in between these two big price points that we have talked about. This is something that you can look at.
Case where
and do we have any other requests?
Drastically to the downside, we may see the price action of USD CAD reversing direction, in which case we may see the price action dropping. Definitely would require clear breaking of the 1.5 support line, and we may see the price action start aiming for the 1.33.
Okay, we don't have any other requests. We can look at other pairs. We did dollar yen, dollar CAD, we did gold, we did dollar euro, and we are going to look at Swiss franc. So dollar franc.
S2 could be adjusted.
Let me remove everything.
Yes. We could use this true here as a new support line.
All right. So let's start from the weekly. So if you guys have any questions, though, I feel that is there any trading chance in you? As in US dollar, are you looking at dollar index?
And actually,
are you looking at dollar index? If you're looking at dollar index, we can do an analysis on dollar index. Okay, let's proceed to dollar index first before we look at dollar franc. All right, you guys can show me with any like weird pairs as well. You can look at silver. We can look at a lot of the commodities as well if you guys would like to. All right. You can see the dollar index right now. We are on the weekly chart. All right, so looks like a upward movement, not surprising. Let me look at any possible horizontal levels to relate to. Not much. Okay, so we'll just look at. We'll just take this price point as a weekly resistance at 113.
We maintain a bullish outlook. Why? Because we had a clear breaking of the 1.35. It moved decisively higher. At the same time, note that we have an RSI indicator which is rising, aiming for the reading of 70. It's not there yet. It's at 57 right now, but it has the potential to rise even further. In which case, should the bullish scenario be maintained, I would expect the price action to reach the 1.3675, if not even breach above it.
Yeah.
On the other hand, we have to note that the price action is about to meet, actually has met already, the upper Bollinger Band and the 200-moving average. So we
very
may
similar
be seeing
to the
some
ones that we are
stabilization
looking
of the pair.
in the dollar
Should the pair
pairs.
stabilize, I would expect it to remain between the 1.3675 and the 1.35.
Pretty straightforward
for
weekly. So yeah.
Do not fool yourselves. I would expect, or I would require, a clear breaking of the 1.35 support line and the price action to start aiming for the S2 1.3385, if not even reach it.
Daily support we are looking here.
Okay, let's have a look at NZD-USD.
Very straightforward.
Nice downward motion.
Not much
breaking
movement.
the 0.5870.
Looking at H4.
In red.
Very similar to the
trend line.
one that we are looking at just now. Very similar to the pair that we're looking at just now.
Valid.
Okay, let's focus on the 112.965 as the most recent resistance.
Widen this. It's really wide as it gets.
I wish I can say that there's more trading chances, but I think the movement are pretty limited. Price point difference not very big.
It's pretty narrow. It's asymmetrical.
However,
but
I think I may have spot a little bit of something. Let's move down to H1. No,
that would be the
wow, it's fine. Okay, so it's a very small upside down head and shoulders. Okay, I'm not sure. Am I seeing this correct? But I think we are. Yep. Okay, so I'm expecting an upward movement. All right. So obviously, right now it's not the best time to go in. If I got in, if we analyze at the price of 109.661, if it's at the bottom, it would have been a very perfect analysis where it bounced up, more straight up. However, right now we are looking at a possibility of not pursuing the full head and shoulders. Okay, so normally we will just take level
0.5985, second resistance line.
slightly slanted, isn't it? I'm trying to level with this,
and
looking at a possible shoot up. Okay, so
the
personally,
final resistance
I
line
would
being placed
think
at 0.60.8. Sorry, 0.6080.
Okay, so we are looking at for the price to actually increase further, for the price to cross 111.123 to proceed with a upward movement analysis.
The Kiwi has broken the upward channel would be another indication, and the fact that there are consecutive lower
okay,
lows
let's
and
just say this is
low peaks
hypothetically
and low lows
entry, and this is
tends to imply that it's not a once-off like this one.
We will need a stop loss, putting it back.
We have a consistency here, which tends to support the bearish outlook. Also note there is an indicator which is moving downwards. It has broken below the reading of 50. It's actually now at 39.70, pretty low.
Okay, if this is
so we tend to maintain a bearish outlook. I wouldn't be
possibility we are
surprised to
looking at.
see the price action slowly but steadily approaching the 0.5770, a level which provides resistance support in the past.
Okay, so let's bring in some of the Fibonacci levels.
Should the stabilization occur as the price action has reached the
Okay, we
lower
can see our
bulge
take
band,
profit is
I wouldn't
actually
be
very
surprised to see
nicely in line with
continuing
our
a sideways
100%
motion between the
Fibonacci
0.5870.
projection.
That
Let's just
would
remove
require,
the
though, a clear
61.8.
breaking of the downward trend
And
line
then
guiding the
let's
pair
take a
right now.
look at
For a bullish scenario, which may be the least probable one, but still possible, we would expect the price action to reverse direction, break the downward trend line.
All right, so the reason why I want the price to actually
once again
exceed
start aiming for the
111.23
0.5980 level, which was tested practically the day before yesterday. Let's have a look. On the 9th, actually yesterday.
Is for the price to actually get into Ichimoku cloud, and best if it is able to actually exceed the Ichimoku cloud.
I would like to note another support line.
Okay, let's take out the conversion lines and the baseline. Okay, so we are waiting for the conversion line and baseline to cross first. All right, let's look at our stochastics.
That would be 0.5510. We're keeping it as an S3. Okay,
so we are actually looking at a support level that actually stochastics recently just touch point with at 3.10. There's a high chance where stochastics will still move up to this resistance level at 96.39, which also means that there's a high chance for price to actually keep moving up.
Okay, there's nothing much here.
You can see the blue line, which is our percentage K.
Seems to have stabilized over the past 24 hours.
Our percentage K has already
testing the upward
it's already above percentage D. As a sign of upward movement. All right, so that's why something you can observe, continue observing and see where the price level did. The price level eventually exceed 111.123, persisting to move up to our potential take profit at 112.956.
On the other hand, though, it may
all right,
bounce
so that is for DXY.
Right and start a renewed.
All right, are we looking at any other
pairs? Breaching the 1735. Should the bears take over?
Just one last one.
Dropping,
if not,
we'll
also take a look at the VIP room.
1681.
So
that should be it from all of us here at IronFX. Best wishes for solid trading.
Trader.
Welcome to another of one of our helpful videos. Today, we'll be taking a look at what a call option is. Also known as a high option, a call option is a financial contract between two parties to which the buyer is given the right but not the obligation to purchase a financial instrument or stock from a call option seller at a set price on or before a specific date. The instrument is called the underlying asset. When the price of the underlying asset increases, you will see a profit. The cost of buying the call option is called the premium. The premium acts like your insurance against the large loss. This is because the sum you pay for the option is the maximum amount you can stand to lose on that option. The last day the option contract is valid is called the expiration date or time to maturity. It is the date by which you'll need to exercise your right to buy the asset. If you don't, the option loses its value and you essentially forfeit the premium you paid. The set price is also called the strike price. It's the fee the seller agrees to sell the asset for on or before the expiration date of the contract. So, why does someone typically buy call options? Well, call options are usually purchased to make a profit on stock. They're also considered low risk because the most that you can lose is the premium you paid. But as always, be cautious when trading and understand all the risks that come with it. Thank you for
All right.
So yeah, let's begin. So yeah, the turtle trading strategy. Have you guys heard about it? Turtle trading strategy. So it was a pretty successful trading method. Well, it's usually used on the daily. So I'll show you guys. So yeah, welcome everyone for joining. My name is Chen Yongjing, and I'm the trade analyst for Everest Fortune Group. So our company, Everest Fortune Group, we are the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So yeah, so we actually have a special collaboration with IronFX where we are bringing you guys the good stuff. Okay, the agenda, the topics for today. Who were the turtle traders? What was their trading strategy? Breaking down their strategy and improving on their strategy. We also will look how we can craft our strategy. Well, I'll be showing you guys how I implement it with my personal trading method. So yeah, who were the turtle traders? Let me get my device over. Okay, who were the turtle traders? Well, they were two people, two of them, Richard Dennis and Bill Eckhart. So they were part of an experiment in 1983. It was run by them, Richard Dennis and Bill Eckhart. They wanted to test if successful trading could be taught to novices, people who did not know how to trade. So they taught the turtles who were their novices, a trading system that resulted in very positive results among the study participants. Also, some traders continue to use their trading system or their own version of it up to this day. So this method was from 1983. Just a very, very quick history lesson. Let me get the participants out. Okay. What was their trading strategy? So they enter a buy when price breaks above the 20/55 day high or low. I'll show you guys the indicator on TradingView in just a bit. So their stop loss is pretty subjective. A pretty subjective stop loss. Risk management as usual, only risk 1 to 2% of your account. For me, I personally risk 1% or less of my account. So it's the same for short trades. Price breaks below the 20/55 day high or low, and then you take a short. So yeah, they actually did the experiment. So Dennis, so this guy Dennis right here, Dennis actually believed anyone could be taught to trade the futures markets, while his friend right there, Bill Eckhart, he countered that Dennis had a special gift that allowed him to profit from trading. So he felt that only certain people could trade, and most people are not meant for trading. So he used his own money and brought in some trading novices. Was a tremendous success. So the question right now is, the market conditions are always changing. We want to know whether this style of trading can survive in today's markets, whether does it still work. So turtle trading is also based on purchasing a stock or contract during a breakout, quickly selling on a retracement or price fall. So yeah, they usually do it on the daily. It was also one of the most famous trend following strategies. So they actually turned $5,000. How successful was it? Into more than 100 million just by using the turtle trading strategy. So yeah, it's extremely successful. It was a successful experiment, but now we want to know whether this style of trading can continue to survive in these volatile markets. So yeah, breaking down their strategy, they actually use the 22 and 55 days setting. Let me get it out in charts. Okay, so this is how it looks like. You can search on it. It's called the Donchian channel. So after I present this part, I'll get to trading view. So the breakdown, the 55-day setting is normally used for the... Okay, I think I had this part wrong. Give me a moment. Not sure why this part. Okay, this is the 22-day. My bad, guys. So yeah, let's continue. So this is the 22-day setting. It's normally used for short-term trades and for scalps. For scalping, so this is the daily chart. Well, for the 55-day setting, you notice there's quite a big difference, 22-day and 55-day. So it's long-term, it's more for long-term trades, it's more refined, so there are lesser opportunities to enter a long or a short. And it's better to use the 55-day setting. So yeah, let's get right into trading view first. Let's get right into that. So trading view. So let me load out my layout. Why am I opening the file? So yeah, nice. Pretty good. Let me clear this out. Okay, let's take it on Euro. So you can actually search indicators. You guys can follow me, whip out your trading view. And take out your trading view and then you search Donchian channels. So this is what the turtles used when they were trading back then. So someone actually made an indicator out of it. Donchian channels. So you click on it. So you can take a look. So how do they trade? So example, let me set the thing to 55. 55 days, 55 settings. So for 55, it's more accurate, but the chances of the probability or trade opportunities are lesser, but it's more accurate. So let's say you take a short here. So I just give a very quick explanation on how it works. So the moment price moves, and then it taps into the bottom this turtle area, and then you sell. So it's just a very simplified term. You sell, and then you take profit. You continue holding, but they only take profits when there is a price is pulling back or consolidating. So they only take profits when price pulls back or consolidates. So price can move, and then consolidating here, they can potentially start to take profits, close out their trade, or wait for price to tap into this orange color line. So I'm actually simplifying the terms, make it easier for you guys to understand. So yeah, they either through a consolidation, pull back a bit, some traders shut it down, or consolidate, shut down the trade, hit back onto this nice little orange moving line, they close out their trade. So yeah, how about taking a long? So let's say price taps into this area, they take a long position, but their risk to reward isn't that good. So let's say they take a long right here, but price below, stop loss, and trying to aim for one-to-one risk to reward, but it never happened. It didn't happen. So price nearly even hits the one-to-one risk to reward, but then it reversed back down. So yeah, that is why they manage their trade when price seems to be pulling back. So yeah, I honestly think it might be a pretty dangerous style of trading. You guys might have to back test it first. So yeah, this is only one indicator, and I always stress, please do not just trade using one indicator alone. Always use multiple indicators when you are trading. So yeah, let's take a look. Another example right here. Price tapped into that area. Okay, this area, it was a fail. Price went up, failed to break, stop loss. So this trade would be a wrong trade. So let's say here you take a long, price went up, long, stop loss at the bottom. You can be here, It's very subjective, as I mentioned in the PowerPoint earlier. It's a subjective stop loss. So let's say if you put your stop loss there, you don't even get one-to-one risk to reward. You get 0.9. But there are some ways you guys might potentially, you can refine it. Maybe you think that price might not hit back down to this area. So you might have a 1.26 risk to reward, but always do remember that is just the best possible scenario. So best possible scenario is at the top, but no way that we can trade and have a very, very perfect exit, right? So let's look to the left of the chart. So maybe there's some kind of potential area that we might want to take profits at. So let me clear this out. Actually, so far, where are you guys? Just interested, where are you guys tuning in from? See, you guys have nice names, Michael, Dale. So yeah, I'm from Singapore, by the way. I'm from Singapore. Let me send. So yeah, hi Josh, hi Antonio. Nice to have you guys on here. Is it the first time you guys heard about the turtle trading strategy? Let me continue. So yeah, with that said, with price heading up, best possible scenario, maybe we have a nice area right here. We might have an area. Some people might take profits over here, or they might take profit over here, or they want to take it when it clears the high, or even this high. There are many take profits area that you guys can choose. It's still very subjective, taking profits. Oh, nice, you are from the United Kingdom. Okay, I always wanted to go to the European side, UK. So I guess we are like across the entire world. We are far apart. So yeah, I'm in Asia. My country is very, very small, Singapore. So yeah, let's say you take profits here at the very, very top. Your risk to reward would be pretty bad. 0.67. But if you take profits at the high right here, I'm just showing possible scenarios. We might not always get this right. The risk to reward, just right, it hit 1. So yeah, the Donchian, this turtle trading style is actually taking quite long to take profit. So let's say I pull. It took a good, okay, took quite a while. 2 days, 12 hours to take profits. But let us look at the daily where the original method was used. Okay, nice. You're from Portugal. Which part of the world is that, may I ask? What is the closest country? Let me check. Portugal, Spain. Nice. Okay, nice deal. South Africa. Wow, we have everyone from all around the world. Nice. All right. So we take a look. Let's say we go for shorts. Price moves. Wait, let me clear this out. Price moves, and then tap. We short. We take a short right here. Our risk to reward, we have it right up there for stop loss right there. But pulling it down, we want a minimum of 1-to-1 risk to reward. So let's say we are just talking about the best case scenario where price hits 1-to-1. It took very, very long, even on the daily. It took a very good 62 days for 1-to-1 risk to reward. That's not counting your commissions, the commissions you have to pay to the broker or the swap fees. 62 days for 1-to-1. So that is basically how the turtle traders traded. Hey, I see two Antonios. Are you guys the same person? Okay, yeah. So let's look at the long. I'm just looking for a possible long position. So spotted this area. Price taps at the very top. Let's take a long. Okay, nice. You are the same person. Okay, nice. Okay, price went up, tapped. We pull. We have a stop loss right there. And we pull it up. We want a best possible scenario, 1-to-1 risk to reward. So pulling down, okay, this is actually not bad. It took a good about 7 days, 1 week for 1-to-1 risk to reward. So yeah, so you guys got the gist, a rough idea on how the total trading strategy is used. They are usually on the daily using the 55. For those who have just joined, it's called the Donchian. I saw quite a few people slipping in. It's called the Donchian channels. So yeah, I'm using the 55 rank. It's for longer term trades. So let's get back right into the charts. Since you guys have already have a gist of what is going on. So yeah, you can improve on their strategy. So you are looking, their risk to reward isn't that great, but we want to involve other indicators, other type of concepts such as the MACD, stochastic, smart money concepts, and even ICT concepts. Any of you guys using the MACD, stochastic, or even smart money or ICT concepts? Do let me know in chats. Do you guys use that? Maybe you guys can, back test it out, see whether it's possible. Moving on to the next slide. So yeah, we can implement the moving average. So yeah, the moving average is actually already inbuilt in the Donchian channel, is the orange line. So I'll just move on from there. Moving average, when you just adding confluence, price steps into that area and price is underneath the orange moving average line, guys can sell. But then maybe I'll show you guys better methods to increase your risk to reward ratio and have a better entry. So maybe you guys can implement this stochastic indicator. Price goes up at this area, it's coming down. So we are looking at maybe possibly this area. Price is coming downwards. You can sell it, sell until price hits the oversold area. So at the oversold area right there, you guys can probably exit your trade. Let me clear out this chart. It might be a little bit messy. So yeah, in another scenario, okay, let me move up. In another scenario, using the stochastic indicator, price, let's say it's here. You're looking for sell. Price went in, Continue sell, 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 sell. But where can you potentially take profits? So around here, maybe when price starts to reverse back up, this area I see a reversal. So moving upwards, it's around here. Potentially, you might have actually closed your trade already just by implementing stochastic to the turtle trading strategy. So yeah, my very, very favorite method is using smart money concepts. So just by using smart money concepts, I can potentially know where to take profits or start to look for a sell. So maybe at this area, price went up and I can start to buy. But you know, sometimes your risk to reward might be negative, a negative risk to reward, but you don't know where to take profits at. So take profits, you can use smart money concept. So this is called the supply zone. So at the supply zone is an area where you can potentially take profits, stop loss, not sure how, it's on the daily, it might be possibly at the bottom here. Take profits right there. Risk to reward is negative, but profit is profit, right? I actually do know some people who are profiting using a negative risk to reward. And yet they are full-time traders, negative risk to reward, scalping. They are just scalping, everything adds up, they make money. So yeah, this is another way that we might potentially enter. Let's say this area right here. Let me clear out the charts. This area right here that we are looking at. So price goes down, breaks. But you want to have a better entry. So we wait for a pullback, a retracement pullback for price to tap into the supply zone. And then we short. We take a sell with our stop loss at the top there. And then the risk to reward might potentially increase to maybe 1 to 3, 1 to 2. It's even better. Let me go to the live charts to show you guys. So yeah, so maybe on the daily right here, let me clear this out. So let's say price coming down, coming down. Then you want to sell, coming down right here, you want to sell, but wait, hold up. Let's price. So in another scenario, you wait, and price already went quite low. It's not wise, like, to have a sell right here if you missed out on the entire trade. Stop loss at the top, but by then, how long do you want to wait for 1-to-1? It's going to take weeks, months to have a 1-to-1. So how are you going to improve on that? So using smart money concepts, you can potentially use and possible, what they call it, a breaker block. Why is it called breaker block? Because using smart money concepts, this is the last area. Let me draw it out. Where's the brush? Where's the brush? Okay, this is the last candle that caused the rise up and break in market structure. So this candle caused both of that. So looking at that, we can potentially have a short. You guys can actually look up on smart money concepts on YouTube. It's very informative. You guys can actually have some kind of. So actually, sometimes when I use smart money concepts, I managed to get some pretty nice sniper entry type of trades, looking nice. So you look at your meta trader, you shot from the top. It looks pretty nice. So yeah, it looks like it's an Instagram style trade. So yeah, it's pretty nice. You guys can look up on smart money concepts. So with our stop loss at the top here, at the last area that caused the break in market structure, our risk to reward has significantly improved. So let's say we want a 1-to-1 risk to reward. We only got to wait instead of 7 days. Just now the best one was 7 days. We waited in total of only 8 days. Okay, still 1 week, but it's much better. So normally where you want to aim is for price to continue going down. As I mentioned, the turtle traders wait for price to consolidate, or tap back into this line for them to close out their trade. So potentially once this area starts to consolidate, they might have already closed. So to give a benefit of a doubt, maybe they close it right here. It can be anywhere, but then the risk to reward is more than 1-to-1. For this scenario right here, you can see it's 1 to 1.43 risk to reward. So yeah, any questions so far? If you are confused, do let me know. I can slow down. I can re-explain what I was explaining. Any questions? Or what kind of trading methods do you guys use? Maybe I can try to help implement it into the turtle trading strategy. Do let me know. I'll try my best to help you. Wait, so let me adjust this mic. Okay, all is well. Let's move on. So yeah, maybe I'll just show more examples. Closing this out, I just clear the chart. Oh, you said you are new in this, so you are just adapting to this area. Oh yeah, what do you mean by you are new in this? Are you new to trading? Are you new to trading, or is this a new trading style that you are probably looking at, the turtle trading strategy? Adapting to this new area. Do let me know if you are a beginner, so I can maybe slow down, try to explain more of those slightly confusing stuff. Let me move this, move that. Okay, so while maybe you are typing, I'll just continue for a while. So yeah, looking at this area, maybe looking at this area, price, tapped, looking for shorts. So you actually saw price, let me get the brush out. Brush tapped into the bottom area, but if you look for short immediately, it would have been a stop loss at the very, very top, stop loss there, and you got a best case scenario, not even a 1-to-1 risk to reward. So let's implement smart money concepts here. Let's implement it here to have a better entry. So what you want to do is wait for price to retrace. So price retracement, meaning you are waiting for price to head back up for a better solid entry. So this is where you can actually implement the, let me get this out, the supply zone right here. So with that supply zone, I'll just put it in red. Supply zone there, you can take a shot and your stop loss at the very top at the previous high. Let me get where's the call out? This is known as the previous high. So yeah, your stop loss can be at the previous high, and then 1-to-1 risk to reward. It took around 7 days. It's still 6 days. Pretty much nice, but as usual, for turtle trading strategy, you continue holding your trade. Just remember, this strategy is for people who do not know how to trade. They are novice traders, so they would not know that if price has broken some kind of random area like here, so they would probably control their trade. No, for turtle trading, you are just new to trading. You hold, the trade went down, but then price reversed. So price reversed. Wait, let me get the brush. So price reversed up here. You might probably close your trade back up there with a 1 to 1.45 risk to reward. So yeah, turtle trading is just holding. They enter already. They just hold until either price reverse or consolidates. Hey, yeah, you are new. You are in Iron just with a friend that's trading for me. Oh, so you actually do you put money with your friend and he trades for you? trades for you, but I would suggest you learn trading so you can actually enter your own trades. It's better to learn trading, instead of asking. I know it's fine to ask someone to manage your money, but it's also good on the side, especially now you are joining this webinar, you are learning, understanding how trades are executed. It's very, very good knowledge. So when I first started trading, my friend put me in, same thing. I actually gave some money to him to ask him to manage, but he actually blew the small accounts. I gave him a relatively small account, $100 only, since he said he knew how to trade. So I gave him $100, let him manage it, but the risk management was pretty bad. So yeah, he actually blew my $100. You said your friend is trading daily, buy and sell in the same day. Oh, how's his performance? Is he making a sizable return? How much percentage is he making back on the accounts? So yeah, so I was saying back then, my friend actually blew my $100 that I gave him. Back then, I didn't want to learn how to do trading. I just wanted the money to work for me, getting back a huge sizable sum. Oh, nice. 1% a day. That's a lot, man. 1% a day, that means, okay, plus minus 1%. That's a lot. So to take that, so for those who are listening, 1%. So his friend is actually helping him make 1% per day. So let's take it as a week. So it's 5% a week and 20% a month. Take that into consideration. The account is $1,000. He's getting back $200 in profits in a month, which is very, very good. What method does your friend use? What does he use? What does he use to trade? It's actually a lot, man. 1%. So yeah, just to maybe put into perspective, for small account holders, many of us, we don't know. Do ask him. It's actually interesting. You can find out what method he's using. And you can actually learn, you can start to research and try to trade on your own. Maybe you can start with a demo account. Why not start demo accounts, start to learn? So yeah, maybe put into perspective. So usually on small accounts like this, $1,000, many people are using $1,000 account, $100 account, $500 account, and even $10,000 account, 10K. So what they like to do is they like to aim for those very, very huge profit return. 10K account, they try to aim 10% per week. So 1 month, 40%, they aim to make $4,000 on their $10,000 accounts. But I know someone in real life, he actually handled, let's put into perspective. This is real life, someone that I know. He was handling $20 million in Forex account. So he was managing people's money, $20 million in cash. And then what was his risk? He only risked around 1% or 0.5% of his accounts. So per month, he only needs 3%. So he was only up 3% per month. This is per month. I'm just sharing my life with you guys, 3% per month. So he's making around 600,000. Let me get the calculator just to confirm the calculation is right. 20 million times 3%. So yeah, it's 600,000. 600K profit. So yeah, if you are looking at a huge amount of money, so 500,000, $1 million account, you guys might probably want to look at the smaller percentage. Just small little 3%, you can make a lot. But unfortunately, not everyone has that privilege. I'll just delete this out. Not everyone has that privilege to, have a very, very huge account, $100,000 account even. So many traders aim for huge percentage gains just to make that nice $4,000, $2,000, $3,000. But when you are chasing the money, just remember your psychology might be hit pretty hard when you lose a trade because you are just chasing the money. You need to make that certain amount per month. Nice, you are with him for 2 months. So how's your gains with him for the past 2 months? May I ask? If that's a sensitive question, you might you don't have to answer. It's okay. It's fine if you don't want to answer that. What was the gains that you had? So yeah. So with that, let me continue for a while. Let me continue this area. I'll try to find maybe a long retracement. Let me find a good trade setup. So total trading is not for everyone because you have to wait. There's a very, very long waiting time for trades to happen and for trades to move to a direction you want, and you have to monitor it. So in such a situation like this, let's show a failed trade. Let's show a failed trade first. So let's say price taps in, you're looking to sell, but you remember, oh, Yongqing told you to wait for retracement. Wait for retracement, and then price went up, went back up, and then you try to short it at this little area, but price continue moving upwards, hitting your stop loss. So yeah, you should have some kind of nice stop loss, tight stops, where you must set a stop loss. Just remember to set a stop loss. You do not set a stop loss, you can potentially blow your account. Well, you invested 5K initially. In the last month, you put more than 10K. Hey, that's nice, that's nice. You're with him more 3K plus. Okay. So you actually threw in more money, you made 3,000 over with him. But the very, very big question, okay, just for your safety, just in case you get scammed or something, I'm not saying that your friend is scamming you, but do you have access to the money? Is the money in your own broker account? Or did you pass him the cash entirely? There's a very, very big difference whether you have control over when you can withdraw the money. Better do check that out, just in case, I'm just worried about the safety of you guys, man. So yeah, maybe in this situation, okay, we can continue first using the ICT concepts. So who has heard about ICT? Say in chat, what is ICT? ICT is inner circle trader. So that's the ICT concept. You guys can actually learn from him on YouTube. That is his logo right there. He actually teaches things for free on YouTube. You guys can check it out. I think it's very, very informative. I've been using some of his concepts with my trades, and it's working pretty well. So yeah, ICT concepts, mainly he has the use of market imbalance. So this is something, market imbalance. This is something that maybe you guys first time hearing it. It's very, very important when you're trading. So I actually back tested the market imbalance concepts that he was talking about. And yeah, it ripped some, it was very good, very good. Let me show you guys on the charts. Let me show you guys, wait, give me a moment, pull things up. Okay. Let's get me a moment. ICT concepts. So he focuses a lot, from ICT concepts, he focuses a lot on market imbalance. So what do I mean by market imbalance? If you can see right here, do you like it when price does this entire area? Or do you like it when price moves very nicely in a nice order flow fashion? But if price measures down like that, like this area right here, I don't like it. Why don't I like it? It causes a lot of imbalance, like Thanos, Marvel MCU, causes a lot of imbalance on the charts. So what do we have here? If you draw from the top, of this area, this candle right here, to, okay, let me get it. Okay, maybe I use a different color. Draw from here to here. You can actually notice that price tapped into the market's imbalance area. So this area is an imbalance price previously, did not come into this area, but it came back up to tap before it continue going downwards in this bearish market. So yeah, you continue looking. Let me show some more examples. Price tapped into the market imbalance area before it continue moving down. Here too, price tapped into this market imbalance right here before it continue heading down. So yeah, just do back test. I'm just showing you guys some kind of back test where you guys can fall on data to back up this market's imbalance theory. So you can draw a rectangle right here, same thing. Price tapped into the market imbalance before it continued going down. This area right too, price initially tapped into it, but went down before there was a shift in market structure. This is a higher high was from. This was a previous high, but a higher high broke the structure. Okay, yo, Antonio, is that you, Antonio? Okay, you said thanks. You have two accounts, the original and a secondary. That's the one he's managing. Initially, he was trading with IG. Well, the question is maybe what I was trying to ask was, do you have control over the accounts? Like you can log in, you can withdraw your funds. You have control over the accounts that he's helping you to manage. So yeah, this is the market's imbalance. Very, very nice order flow that I'm talking about. Okay, nice. Okay, that's good. Okay, I'll just worry about your safety, bro. There are quite a few. My friends actually got scammed on Telegram a few years ago during the COVID pandemic. 2020, they had the Forex, there were a lot of Forex scams on Instagram, on Telegram. So people told him to deposit like $500 US, $1,000 US, transfer the money, they will manage it for him. So he actually transferred $500 US to someone over Telegram, and he never got the money back because the person promised huge returns. So yeah, I'm just being wary, just asking you guys. And that same guy who was he did not want to learn trading also. Back then, he asking people to manage money. That's the reason why I'm just sharing. Hopefully that you will learn trading. Hopefully you can manage your own money. You can do well for yourself. So yeah. So my friend lost a lot of money due to all these scams, and he actually took time to learn trading. He sat down, learn, and then 3 years later, since early 2019 until now, 3 years later, he's actually trading pretty profitably on his own. So yeah, it takes quite a lot of time to learn trading, but once you get the gist of it, I told him, well done, man. He actually took the time to learn. So bro, Antonio, so maybe I can get you started on trading by yourself. So maybe, no, I wouldn't stop you on what you are doing, but maybe you can start to learn on Inner Circle Trader. You can search it on YouTube, bro. Inner Circle Trader or Smart Money Concepts. You can read these two up. I really, really recommend it. I have a friend right now who currently do not know how to trade. I recommend him Inner Circle Trader or even Smart Money Concepts. They actually start to understand, start to see, oh, where did I enter the buy? Where did I enter the sell? So maybe you guys want to see how I trade. So the turtle trading strategy is just like that. So if I were to give my personal opinion whether the turtle trading strategy still works in the current market, I would say the rewards reaped from this method is not that great. The risk to reward isn't good. It's not that good anymore. Because last time, people always believed that stocks would continue rising. They always believed that stocks would continue rising. So back then, if the turtles were trading in a long, they were buying, heading upwards, they could have reaped that profit. So I would believe they turned 5,000 to 100 million. So I would believe that back then there was like only one trend was forever going up. So yeah, right now it's volatile, price moving different ways. There's many events going on in the world, the Russian-Ukraine war, and especially those who are trading right now, do be careful of the US midterm elections. It might cause more volatility in the markets. So maybe just to show you guys how I trade, I'll clear out the charts, I'll close out this indicator. I'll just present to you how I trade. So I normally like to craft. So I'm using smart money concepts and some ICT style concepts. So how I trade is, I always like to look at the daily first, top-down analysis. You can see I don't use any indicators. I close out all my indicators, everything is crossed out. So let me X it out. So I don't use any indicators when I'm trading. I don't use RSI. I do not use a MACD. So how do I do it? I like to craft a story on the charts. So it's like I'm looking at a picture and I'm explaining to people what is going on. So looking at this area, I want to know, why did price cause this bounce? I want to know every single part of the chart. Why did price cause this? Why did price cause this? I want to know, why did price reject down to? Before I start trading any currency, I want to know the story. So there's a storyline behind it. So if I draw a line right here, using smart money concepts, draw with a magnet tool, you can press this magnet tool, it sticks, you can see, it sticks very nicely. Stick it, you draw one line. So what did you notice? What do you notice? Let me zoom in. Price went down to clear all these wicks, clear all this liquidity. Just take it as, just imagine the market maker went down to cut out your stop losses, gather enough money and continue heading upwards. Just imagine it as that. So I'm using an imagination. That's not what is actually happening in the market. So I'm just saying that price came down to grab liquidity from all these areas and then continue heading upwards. So what do you call this area? I call this the sell side liquidity. Let me change the size to 16. So sell side liquidity, price came down, grab liquidity and continue heading upwards. And we have a minor liquidity grab right here, but I will not write it out. And price went up. Why did price reverse from this area? So I'm looking, liquidity was built up here and here. So I'll draw out. Price went up to this area and cleared the buy side liquidity. So let me change the text size to 16. So buy side liquidity was cleared right here. That's the reason why price reversed back down. But looking at this area, I'm trying to craft out a reason. I can't see anything on the daily. What happened? What's going on at this area? Why did price, what was this area that caused price to bounce? And if you look at the dates, this was on Friday, 4th November. It was the release of the US, the NFP data. So NFP data release, it's a very important event. So Antonio, do take notes, the first Friday of every month, they release the NFP data, but the unemployment rates worsened for the US dollar. That's the reason why Euro USD continue going up. So I cannot see anything on the daily. I move on to the 4 hours to get a better picture, craft the story on what is going on. So what do I see? What do I see? I see that price came down to the demand zone. So I'll just turn it green. I'll name it the demand zone. Inside center. So price tapped into the demand zone before it bounced and continued bullish. Well, And then looking back at this area, I want to know what is currently going on at this current area. Price recently cleared also the buy side liquidity. Buy side liquidity was cleared. So yeah, that's why it reversed down. It cleared the previous high, causing price to reject. So where are we located right now? Looking at the 4 hours, where are we located right now? We are currently within the 4 hours market imbalance area. So I draw a line out. You can take a look. We are currently resting in this imbalanced area right here. We are currently inside. So with all this liquidity building up, I might potentially say price might reverse, might potentially go up, clear this area, close. So I'm actually looking for scalps. I do not do swing trading. I do not try to swing a very huge part of the markets. I take shots or longs on the 15 minutes, 5 minutes, or even the 1 minute chart. So with that being said, I'm on the 4 hours. Let me type it out. 4 hours market imbalance area. 4 hours market imbalance. I'll move on to the 1 hour. So moving on to the 1 hour, I noted that price is still in that area. So what I want to do is, there's no picture for me to pin right here. There's 1 hour, there's nothing. We are in the 4 hour market imbalance. Moving on to 30 minutes. Is there anything on the 30 minutes? Yes. Price tapped into the 30 minutes imbalance area. So maybe I can mark it out, but let me check 15 minutes first. Nice. 15 minute tapped in. So I can clear out the 4 hours one already. I'll rename it to. This is how I do my top-down analysis. 15 minutes market imbalance. So price is currently there. So if I were to look for a long, how does a breakout structure look? It looks like this. Price goes down, up. Then what does it do? How does a breakout structure happen? Price goes up. It breaks this area. Comes back down, heads up. This is where you start to take your long. Same thing. What I'm looking for is, look at this. I'm looking for price to potentially break this area before I wait for price to retrace, and then I buy to the upside. So just marking it out quick on the charts. So for tonight, I'll probably be pretty chill. There's nothing for me to take at the moment. So I'll just hold for price to break our market structure top. I'll just wait for price to break that area before I look for any potential longs to the upside. Maybe clearing this high right here. So yeah, this is how I trade generally. I'm actually looking for longs right now. I'm not looking for shorts. So if there's no longs, there's no nice things for me to take, I wouldn't take anything. So yeah, any questions so far for you guys? Any questions? So I'm just showing a very, very quick overview on my personal trading method. Okay, so yeah, that's about it for today, guys. Any more questions? Feel free to let me know. I give you guys another, maybe 30 seconds to ask me any last questions before we end this webinar. Okay, my throat is pretty dry, a bit tired. Drinking is just talking, then my throat got dry. So yeah, guys, if there are no further questions, I'd like to thank you guys for joining me today on this webinar. Let me scroll up. Thank you very much for joining. Hope you guys stay safe trading. There's the US midterm elections coming up. Stay safe trading. Take care. Your risk, just manage your risk. And Antonio, remember, just take your time to learn how to trade. It's fine. And yeah, you guys have a nice day, man. Hey, thanks. Thank you. Hey, bye, man. You guys are the best. Thank you for supporting me. Goodbye. I shall leave now. Take my leave. Bye, guys. Stay safe.
everyone, my name is Emily. In today's video, we will look at trading strategies. So what is a trading strategy? Basically, it's a fixed plan that is designed to achieve a profitable return by going long or short in markets. There are four main strategies. These are day, position trend, and swing trading. Let's look at each one of these. Day trading is the most well-known trading strategy. It involves buying and selling assets within the same trading day in order to profit from rapid fluctuations in prices. No trading position is held overnight, so this minimizes risk associated with overnight movements in the market. Position trading is a famous long-term trading strategy, and it involves buying and holding an asset with the expectation that it will increase in value. Position traders tend to ignore short-term price movements and rely on more precise fundamental analysis and long-term trends. They expect a higher profit per position than day traders, but they also take on greater risk due to the length of time the assets are held for. Trend trading is a strategy that involves analyzing if a market is in an uptrend or a downtrend. You go long if the market is trending up, and you go short if it's trending down. Trend traders remain long or short until they believe the trend has reversed. This is regardless of time frame, which means the strategy can be used for short, medium, or long-term trades. Finally, let's look at swing trading. This focuses on charts and technical analysis. Swing traders look for trends and patterns in the price. Positions are usually held from 1 to several days, longer than day trades, but generally shorter than position trading. Unlike trend trading, swing traders will often take a position against the overall trend. Thank you so much for watching us.